Welcome back to TechKidFX for another quant price prediction update, and in this video I'll be giving you the short-term and the long-term scenarios that I'm expecting to play out, basing my analysis on the Elliot structures and the Fibonacci's, and allow me to kickstart the video here on the daily chart by giving you a brief of what has been happening, where you can see that Quant from the all-time high had been seeing lower prices in this massive ABC corrective structure, which took us back to around the $40.1 mark, and after making our low we started a very nice bounce to the upside, obeying the Elliot structures, and that Elliot structure is better seen here on the 4-hour chart, where you can see I have this Elliot structure in blue, which is a fractal wave to the upper side, having the wave 5 making its peak at around the $229 mark, and also completing the formation of that higher Elliott wave count 1 to the upside. And whatever we expect next after seeing the formation of a higher Elliott wave count 1 is a bit of a corrective structure in the formation of a higher Elliott wave count 2 to the lower side. And once you see the low for that higher Elliott wave count 2, then we can expect an impulsive movement to the upside in the formation of that higher Elliott wave count 3 to the upside. And to give you the short-term scenarios that I'm expecting to play out, I'll be basing my analysis on the formation of this second wave, which is a corrective wave, and because of its corrective nature I also expect to see an ABC corrective structure in formation within that second wave. And there are two ways we can have that ABC corrective structure, and I'll start with the most likely ABC corrective structure here on this chart, where we can term these as the wave A. Then we saw the wave B. Then whatever we are seeing over here is the formation of that wave C, making our low at around the $94.4 mark. And this move right here might be the start of that impulsive movement to the upside in the formation of this higher Elliott wave count 3, where we can term this movement as a fractal wave to the upside in the formation of this wave 3, having this as the first wave to the upside. Then we have seen the formation of that second wave, making our low at around the $102.1 mark. Then I'm expecting another impulsive movement to the upside in the formation of that wave 3, then expect a wave 4, and then continue pushing even higher in the formation of that wave 5, which should complete the formation of a higher Elliott wave count 1 to the upside, which is a fractal wave within the formation of this higher Elliott wave count 3 to the upside. And the movement that we saw yesterday, which was a bit volatile to the upper side, might be the start of that impulsive movement to the upside in the formation of this wave 3, where we can even sketch out an Elliott wave structure that might be in formation within that higher Elliott wave count 3, where we can term this movement to the upside as the first wave to the upside. Then a wave 2 is in formation, then I'll be expecting a wave 3, then a wave 4, and then continue pushing higher in the formation of that wave 5, which should complete the formation of that higher Elliott wave count 3 to the upside. So that means this is a fractal wave within the formation of this wave 3 to the upside, and sketching out a minimum target area to the upside in the formation of this second wave, which is right here. That is the minimum retracement area to the lower side in this movement. After seeing this volatile movement to the upside yesterday, I can use the Fibonacci's, connecting them from the low of the first wave to the high of that wave 1, and that gives me a minimum retracement area between the fib level 0.5 and the fib level 0.618, which perfectly lies between the $109.9 mark and the $107.9 mark. And that is my primary scenario that I'm expecting to play out here on the Quant chart. In case we lose the area of support at around the $110.9 mark, there are chances of fully maximizing this target area, and you can see we have started to see a reaction of the fib level 0.5, and there are chances that we might have seen the low for this second wave. And now that we have the support of the area at around the $110.9 mark, there are chances of continuing to push even higher in the formation of this wave 3, and sketching out a minimum target area to the upside in the formation of this wave 3 using a trend based Fibonacci, connecting it from the low of the first wave to the high of that wave 1, then dragging the fibs to the low that we have made at around the $109.9 mark. We can get a minimum target area at around the fib level 1.618, and that is at around the $137.6 mark. So in case we continue seeing that impulsive movement to the upside, there are chances of making it back to around the $137.6 mark, and that is basing it on the first, that is the ABC corrective structure that I have right here, and this is the most likely ABC corrective structure that is playing out. The other possible ABC corrective structure is having this as a massive wave A to the lower side, and whatever we have over here making our peak at around the $134 mark, that might be the formation of that wave C, and we are seeing a bit of a short-term bullish movement to the upside before we continue heading even lower in the formation of that wave C, which should fully maximize the formation of that higher Elliott wave count 2 to the lower side, and in that movement to the lower side, in case that is the ABC corrective structure that will play out, using the Fibonacci's connecting them from the low of the first wave down there, that is the higher Elliott wave count 1 to the upper side, to the high of that higher Elliott wave count 1, we can get a minimum target area to the lower side between the fib level 0.5 and the fib level 0.618, which is a target area that you have fully maximized. And in case we continue pushing even low in the formation of this wave C, that is the wave C, that is this ABC corrective structure right here in red, we need to continue holding above the fib level 0.78, which perfectly lies at around the $81.3 mark. We need to continue holding above that key area on the Fibonacci for us to say that we have not put a challenge on this Elliott wave structure that I have right here on the Quant chart. So let's be patient and see how that plays out. Also taking a look at the indicators here on the RSI. On the RSI, we are trading at around the 50 mark, meaning we have massive room for us to support any movements to the upper side and also any movements to the lower side. Also taking a look at the MACD, here on the MACD we have been able to print a bearish cross, and that means lower prices are coming our way, and we might fully maximize the formation of this second wave, which I have highlighted here in yellow, before we continue pushing even higher in the formation of that wave 3. And that's the update for Quant. And if you like the video, make sure that you give me a thumbs up, subscribe to the channel, and also check out the channel membership.